Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As we head into the fifth consecutive day, the market is still holding somewhat to a bearish bias. However, as we head closer towards the key levels seen at 66.80, I do anticipate the market to bounce and look back towards its original target of around 68 cents. Given that the technicals are somewhat corrected now after the recent pullback, should allow room there for the bulls to gather in greater numbers and see the market bounce. Having reached the 109 zone, profit taking appears to have merged for the euro. However, the market still expected to see support around the level of 108.35 to 65. As widely expected, the European Central Bank, or the ECB, kept interest rates unchanged at 4.25%. And going from the statement, it looks like President Christine Lagarde is keeping to a data-dependent, that is, wait-and-see approach. Although the dollar index did rebound from 103.70 to 104.10, I do anticipate further weakness to come and therefore see the euro recover and look back towards its original target around 109 to 110 and reassess. Turning to dollar yen, the market has recovered and respected the level around 154.70.90, and from that is now attempting to recapture its bullish bias. But as we move closer towards this region, somewhere around 157.55 to 157.90, we could see another bearish approach and therefore see a move back towards the bottom side of its preferred call of 154.70.90 and reassess from there. If we do see a break of that level, no safety net is seen to around 150.5. After a stellar performance, we're finally seeing profit taking emerge for sterling as the market pulls back and now looks towards the support level of 128.80. I do feel from there could see another recovery due to the fact from the broader pattern, the call is still very much towards 131 to 131.5. Wrapping up with commodities, we're into the third consecutive day. Gold is showing a bit more to a bearish bias and now crushes the level of 2,450, which is open way back to 2,400. Where I do anticipate a possible bounce and therefore expect the price to head through 2,450 and on towards 2,500 and reassess. Due to high volatility, traders should closely monitor signals and adjust their risk management strategies accordingly, just in case we do see a break of 2,400. But at this stage, the call is not there. Having taken the challenge to the top side, oil is running into a bit of bearish trouble as it rejects the level of $82 and now looks back towards the bottom side of its range, seen somewhere around the region of 78.80.90. This is the preferred call given the fact that the technicals are weak and therefore as long as we maintain under $82 a barrel, the bearishness should continue. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report and I hope you enjoy the great start to the day and to the new weekend.